Throughout 2022, the economy remained strong. Unemployment hovered near historic lows.
Showing unemployment at a half-century low.
Wages were on the rise.
We also saw some wage growth, about 5% annually,
causing the Fed to continue pumping the brakes to try to cool down inflation.
The Fed has been raising rates in hopes of slowing the economy. And with so many businesses still hiring, that means the economy isn't really slowing that quickly.
That riled Wall Street.
Facing the growing possibility of a recession, Wall Street spent another day in turmoil.
And you're probably feeling it in those 401ks. Stocks are...
For the stock market and bond market, it was the worst year since the great financial crisis in 2008.
The NASDAQ down for 4 straight quarters for the first time since the dot-com bust.
In 2022, we've had this very unusual situation whereby you've made double-digit losses on both risky assets, stocks, and risk-free assets, US Treasuries. That's not supposed to happen. But there's been absolutely nowhere to hide. That is a big issue for retirement plans, pension systems. No matter how well you diversified your portfolio, there was no risk mitigation in it at all.
It was all losses.
It was all losses.
U.S. existing home sales plunged to a 12-year low in December.
You've seen a huge impact on the housing market.
The Federal Reserve's interest rate hiking cycle has pushed down.
Housing prices have started actually coming down for the first time in a very long time. Mortgage applications have decreased. The crypto market, you've seen a number of companies wiped out.
Crypto winter is here.
That is not unrelated to what's happened with the Fed.
Sam, hold on to me, Sam. Let's go.
Sam Bankman-Fried faces investigations from U.S. regulators and potentially the Department of Justice.
He invested $3 million into Luna, and now it's worth 1,000.
You create these asset bubbles. That is, bubbles in stock markets and bond markets and real estate markets and art markets, whatever people invest their money in with borrowed money. And then those bubbles burst, and then that causes a downturn. So
Stephen Pearlstein has been reporting on the financial markets and the economy for almost 40 years.
That look like that. Bubbles tend to be everything bubbles these days, because if the source of it is cheap money, then you can be pretty much sure that it's not just real estate, or it's not just stocks, or it's not just tech and telecom, or it's not just Bitcoin. These things are connected by rubber bands with each other in a sort of way, and what propels one propels all of them.
There's a famous line by investor Warren Buffett.
You know, you don't find out who's been swimming naked until the tide goes out, and
almost everyone I spoke to repeated that line to describe what's been happening.
When interest rates start to rise and the tide pulls out, as Warren Buffett would say,
you don't know who's swimming naked
until the tide goes out.
You see who's swimming without a bathing suit when the tide is receding.
We'll find out who's wearing their swimsuits when the tide goes out.
What's amazing is that a lot of people, and I would say I'm included in this, think that there probably will be a bigger correction at some point.
But look, when you say you expect there to be a bigger correction, what does that actually mean? I mean, a lot of people are going to see this and get concerned about that, obviously.
Yeah. Let me try and be honest, but not scare people.
Yeah,
if that's possible. So the markets were down 20% last year. That seems like a lot. And if we were in a normal market cycle, I'd say, okay, we're done. You know, we're probably at the bottom. I don't know if I can safely say that we're at the bottom because of what we're looking back at, this age of easy money, not just even since the financial crisis, but before that, you know, for the decades that rates have been going down and down and down and debt has been going up and up and up. That's a long period of time where assets have arguably been artificially inflated. And so is it possible that you could see a continued correction at some point? It is possible. Now, I'm personally not going out and selling my entire stock portfolio. I don't want to scare people, but I do want to say that I think we are in a once-in-a-lifetime financial transition. And I think that everybody needs to sort of strap in for that. And if you need your money in the next couple of years, I would be more cautious than not.
While you've reached the end of the video,
If you are interested in learning more about similar topics, here you will find other really interesting videos from the channel. Thanks for watching this video. Click on the like button if you enjoyed it, and do not forget to subscribe in case you didn't. See you on the next one.